Good afternoon, everyone. Thank you for joining us today on our webinar. I am going to turn it over to Ashley Minch to kick us off for today, and I hope everyone enjoys.
Thanks, Morgan. Hi, everyone. Welcome to our COVID Strategic Relief Options webinar. I am Ashley Minch. We also have Scott Wagner and Ed Thaney on the line. We have our contact information on this slide here. I believe that we were unable to get you guys the full slide deck, but we will send that out once at the end of our presentation. So our contact information is on there. Feel free to reach out to us with any questions. We actually highly encourage that. And also, if you have questions that you want that are specific to this presentation and you want it answered today, feel free to put them in the chat box as we go through. There's a chat box and there's also a questions box. Either one is fine, and we're going to answer them in the Q&A section at the end. Next, I'm going to kick it over to Ed Thaney. He's going to tell you guys a little bit about us.
Thanks, Ashley. Welcome, everybody. As you know, I'm the managing partner of our CPA Firms, which we have two companies in New York and Florida, 3 offices in Florida, and 2 offices in New York. We perform work in over 35 states with strategic planning as well as all other professional compliance work. We profess proactive tax planning before the end of the year's end. We always state that after January 1st, we become historians and we can't do anything about the year that just ended. We've been facilitating many of these stimulus programs with all of our existing clients and even those who are not clients. We have also 3 certified valuators on our staff, and they're CVAs, very helpful with our succession planning, which is heavily involved in our strategic planning, estate planning. We can establish values of businesses for buying, selling, estates, insurance, etc. We have right now about 5 other affiliated companies that we own or are involved with. Transworld Business Advisors is a brokerage company. So if we get to the end of a strategic plan where we don't have a succession plan within your corporation, we can go out and find a buyer or a seller. We could sell your company for you. We can also acquire companies for acquisitions besides organic growth. Supporting strategies is a virtual accounting and CFO services, which is becoming more and more utilized today because virtually the world went virtual, and a lot of this is being done. We're basically taking over some office controllers' jobs or the assistants with them on a virtual basis. We have another company called TLR, which is Technical Learning Resources. It's a book publisher for training guides for QuickBooks. Right now we sponsor to many colleges, universities, of student and instructor guides, and many other organizations that try to enhance the knowledge of the bookkeeping world. We're specializing now with some niche books in there. Right now it's for contractors. We have a niche book, and also with law firms. We are also going in with the updated edition of QuickBooks Online. We have another entity, Clear Choice Capital. It's a third-party loan provider, refinancing, doing business loans. Currently, we're doing a lot with the SBA and helping businesses with the SBA and financing with them. We also then, at the end, have Biz Collections, LLC. Again, we're assisting in commercial collections, and we're also assisting in reorganizations now. We do have some interest in the reorganizations, and unfortunately with some of these circumstances, having to get protection with some of our clients. That's really about it for us and what we have. Feel free to look at our website for any of the information on any of these entities and our other services we have offer. And I think Scott and Ashley will be offering a 1-hour consultation for any of these at the end of our program. So I'd like to turn it back to Ashley, and thanks for joining us.
Okay, great. Thanks, Ed. So a little overview of what we're going to discuss today. We're going to go over the American Rescue Plan Act of 2021, which was signed by the President last week, the Paycheck Protection Program Round 2, the Employee Retention Credit, a couple additional relief options and ideas for you guys, and we're going to discuss the free consultation that we are offering that Ed was just mentioning to everybody who joined us today, and then we'll end with the Q&A session. We'll save about half the time for that, just because most people get the most out of being able to ask the questions and that dialogue there. So the American Rescue Plan Act of 2021, again, last week was signed by the President, and this plan allocated about $1.9 trillion for COVID-19 relief. We're going to go over some of the highlights here that we thought would be of significance to you guys. Obviously, there's a lot to it that we won't exactly discuss today. There was additional PPP and EIDL funding. We're going to discuss PPP in more detail next. The targeted EIDL advance. The original EIDL advance was a maximum of $10,000 per employer based on number of employees. So if an eligible employer received less than 10,000 with the original, how that one worked was it went by the number of employees. So say you had 6 employees, you had a max of 6,000, so you didn't get the maximum 10,000. If you receive less than the 10,000, you may be eligible for this targeted advance. That's first priority to this advance EIDL target. Second priority is for employers who applied for the EIDL advance and did not receive it because the funds were exhausted. The targeted advance will bring these eligible employers up to $10,000 total between the two. So that example that I said where someone got 6,000, they'd be eligible for an additional 4,000 with this targeted advance to get them up to the total of 10. Eligible employers are those with 300 or fewer employees. You must be located in a federally identified low-income community, and you must demonstrate a reduction in revenue of more than 30% during an 8-week period beginning on March 2nd, 2020 or later. The target advance is not included in gross income, which is the same as PPP, so it's technically not taxable income. And if you're eligible, you would receive an email from the SBA with a link for the application. And this email would have come in February of 2021. The Restaurant Revitalization Fund, this is a new program that awards non-taxable grants to restaurants experiencing pandemic-related revenue losses. Organizations with up to 20 locations are eligible. Grants will be awarded based on the difference between 2020 and 2019 revenue, up to $5 million per location and $10 million per company. In the first 21 days of the program, grants are going to be prioritized for restaurants owned and controlled by women, veterans, or socially and economically disadvantaged individuals. As far as we discussed internally, I don't believe that this has been started yet, so that's going to be kicked off coming up here soon. There's also additional support for shuttered venue operators as well, which is similar to the restaurants. Unemployment exclusions, this is the first $10,200 of 2020 unemployment benefits are non-taxable to individuals. The IRS is asking that taxpayers who have already filed their tax returns that with unemployment benefits and they are under these thresholds, to hold off on filing amended returns at this time to get that non-taxable portion. The IRS is extremely backed up with all these changes, trying to make sure that their software and everything gets updated and can accept all these changes. For anyone who hasn't filed, the IRS and tax software companies need to update their systems to comply with the new legislation. I know for us, we're still waiting on our software for this update. The Act also extended the additional $300 per week of additional federal unemployment through September 2021. It was originally set to expire March 2021. The third round of recovery rebate for individuals. This is that stimulus payment that individuals are receiving. Most individuals earning less than $75,000. It's 100 if you're single, 150,000 if you're married filing joint, will receive $1,400, $2,800 if you are married filing joint, along with an additional $1,400 for each dependent. This includes college students and qualifying relatives who are claimed as dependents too. The rebate is completely phased out if your AGI is over 80,000 for single and 160,000 for married filing joint. This is a much quicker phase out than the first two rounds of stimulus rebates. So some people who received a portion in the first two rounds potentially receive nothing this time. Child tax credit, that has been increased from $2,000 per child to $3,000 per child. It's $3,600 per child for children under 6. The credit phases out for taxpayers with income over $150,000 filing joint and $75,000 for single. The IRS has been directed to estimate the taxpayer's child tax credit amount and to pay monthly in advance 1/12 of their annual estimated amount. So people could potentially be receiving payments from July 2021 through December 2021 for an advance payment on this child tax credit. The IRS is planning to set up an online portal that will allow taxpayers to opt out of these advance payments or provide information that would be relevant to modifying the amount. That would be if you had a baby that has not yet been reported on your prior year tax return because you had the baby this year, but that would increase the amount. So there's going to be a portal that will allow you to put that information in. Taxpayers will have to reconcile the advance payment amount with the credit that they are eligible for on their 2020 tax return. This credit starts phasing out for married filing joint over 150,000 and single over 75,000. So I think I might have already said that. This is basically another pain for us as tax preparers to have to figure out, did you receive an advance payment, kind of like the payments for the first two rounds of stimuluses that get reconciled on your 2020 tax return. We need to know what you received, what you're eligible for, and if you get more, if you were eligible for something that you didn't receive, we make up for that on your personal tax return. Family and sick leave credits. The Families First Coronavirus Relief Act has been expanded and extended. The credit program was extended to September 30th, 2021. The credits are fully refundable against payroll taxes for both employers and self-employed. The rescue plan increases the limit on the credit for paid family leave to 12,000, which is up from 10,000. The number of days a self-employed individual can take into account was extended from 50 to 60. So remember, if you have employees or yourself who has been out for COVID-related reasons, those reasons could be sick, quarantine, childcare, you're eligible for these credits. We've been helping a lot of our clients with these new credits and with questions. Even though these are payroll-related credits, we do collaborate with payroll companies to get these credits to help answer questions. You don't want to miss out on these. I've heard of some people either not paying their employees for being out, or they paid them and didn't even know that they could get the credit. This really helps everybody because you can pay your employees and get reimbursed for it. So we're going to move into the Paycheck Protection Program. Again, with the American Rescue Plan Act, an additional $7.25 billion was allocated to the PPP program. However, the current PPP Round 2 application deadline is still March 31st, which is what it was from the beginning. And that's only a week and a half away. Like with the first round, PPP Round 2 applications are done through the bank, and each bank typically has their own individual instructions on how they're accepting applications. We have noticed some banks have already reached or are approaching their cutoff date for accepting new applications. There are other options that are still available for applying, and we're happy to help people out if you can't find some, if your bank isn't accepting. You can reach out to us and we can try to help you find somebody who is accepting for PPP Round 2. Again, the program will be open through March 31st. Any entities that are permanently closed are ineligible. Under the previous stimulus legislation, it came out that deductions are allowed for expenses paid with proceeds of a forgiven PPP loan. This was a change from the original law. It applies to the first and second round of PPP loans and essentially makes your PPP money non-taxable. You don't have to pay taxes on the income. You can still take deductions for the expenses that you paid with the money that you received. There's also additional payroll costs and eligible uses of the funds, and we're going to get into a little bit more of that next. So here's some highlights of PPP Round 2. A lot of eligible companies have already applied for PPP Round 2 that we've been working with. Here are some of the highlights. A borrower is generally eligible for a second draw PPP loan if the borrower does not have more than 300 employees. That's different from the 500 employees for the first round. If the business has multiple locations, not more than 300 per physical location. The borrower has to demonstrate at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. Full year 2020 compared to 2019 is allowed as well. The business has to have used or will use the full amount of the first draw PPP loan for authorized uses. There are different comparison periods for borrowers who were not in operation the entire 2019 year. The loan amount is calculated at 2.5 times average monthly payroll costs. Restaurants, hotels, any businesses that fall under NAICS code 72 can calculate theirs at 3.5 times average monthly payroll costs. The calculation can be done on 2019 or 2020 payroll. I mean, here the theory is that if you're down in gross revenue, because you have to meet that 25% decline, you probably didn't have more in payroll, but due to pandemic pay and other reasons, we do have some clients who their 2020 payroll is higher, and you will want to recalculate based on the higher amounts when you're applying for a PPP Round 2. All right, here's a good one, the employee retention credit. It's confusing, but it can be a large credit amount to people, to businesses, so we want to make sure that we're at least explaining so you can know if you may be eligible or want to look into it. We go over this with all of our clients and determine if they're eligible and help them get the credit. So there's different rules for 2020 versus 2021. It can get super confusing, but we'll kind of break it down here. And there was a big change compared to previous law, so that's why this is all coming up now, even though we're into 2021 and we're saying you can go back to 2020 on this. The retention credit and PPP can now be taken in the same year. That's a big thing. Although there's still no double dipping, only wages not covered by a forgiven PPP loan or any other tax credit program are eligible for the employee retention credit. Again, the specifics and eligibility are different for 2020 versus 2021. We'll start here with 2020. To be eligible, you need to have had at least a 50% decline in gross receipts or a full or partial shutdown due to the government mandate. The 100 employee threshold determines whether you get the credit for all employees' wages paid or those employees paid but aren't actually working. There's a big difference there. At this point, the only option to get the 2020 retroactive credit is to file amended Form 941 payroll tax returns to get the credit, because 2020 is obviously already passed. Those returns are already filed. We would have to amend. Let's look at the calculation for 2020. For 2020, the calculation is 50% of wages up to the max per employee of $5,000 for the year. The wage threshold, if all employees' wages paid count, or if the wages paid to employees who aren't actually working. We've been able to help a large percentage of our clients get the employee retention credit retroactive for 2020, especially up here in New York where I am. We had practically a full shutdown in March 2020 when COVID first started. And from what we've heard, payroll companies have yet to fully explain this to their clients and discuss about eligibility. They do send out e-blasts and stuff, but not really discussing specific clients' eligibility. Our clients have been relying on us to help navigate this with them. At 50% of the credit being 50% of wages paid for eligible time periods, the dollar amounts can be pretty significant. This is one area we really want to stress today. If you haven't determined your eligibility for the employee retention credit, especially for 2020 or for 2021, you're going to want to reach out to a CPA for some assistance on this, because it can be confusing. The 2021 calculation is different than what we just went over. Instead of the $5,000 credit per employee, it's up to a $7,000 credit per employee. The credit is 70% of wages up to $10,000. That's where the $7,000 comes from. And this is per quarter, where in 2020, it was $5,000 for the year. There's a big difference there. There's a lot more opportunity here. I think the thought is that if you're still having, this decline in gross receipts or full or partial shutdown, you should be eligible for more. So that's why the 2021 is different. The major changes from 2020 to 2021 in relation to the employee retention credit are that the employee threshold goes from 100 in 2020 to 500 in 2021. So a lot more employers are eligible for the expanded credit on all employees rather than just employees paid that aren't actually working. The revenue decline is 20% in 2020 compared to the 50% in 2021, compared to the 50% requirement for 2020. The other qualifications remain the same, that if your business was fully or partially suspended due to COVID, you can qualify under that instead of the decline in gross receipts. Also, one very important thing to point out, if you qualify in one quarter, that automatically qualifies you for the next quarter. This also applies to fourth quarter of 2020. Companies with a 20% decline in fourth quarter of gross receipts or a full or partial shutdown, no, that one doesn't, the 20% decline, can automatically qualify you for quarter one of 2021 for the employee retention credit. From what we've heard, if you qualify for the retention credit in quarter one of 2021, you want to make sure that the credit is properly claimed on your first quarter 941. We're almost to the end of quarter one of 2021, so you want to make sure you get this all handled and to your payroll companies now, because they are expecting a lot of delays in the IRS processing of these refunds. So getting it recorded with 2021 is going to be the most efficient way of getting this credit. Again, ask for help payroll providers, CPAs, all of us have to work together with you to get this done. So how you get the credit is directly taken off of your quarterly tax bill. Again, that's the 941s and the amended that we're talking about, or not amended, getting it actually in on the quarter 1 2021 that you would file. If your credit exceeds the payroll taxes that were withheld on your 941, you can request a direct refund from the IRS using Form 7200. Okay, so just to recap, the employee retention credit, there's a lot of the different qualifications for 2020 and 2021. You want to make sure you have a handle on that and are talking to your CPA about it. Moving on to a couple other relief options and reminders that we wanted to go over with everybody. The EIDL grants and loans. We talked about the targeted EIDL advance because that was new part of the act passed last week, but just the general EIDL grants and loans. Unlike with PPP loans that you get through banks, for the EIDL, you can apply directly through the SBA on their website. The SBA debt relief program is for the 7A loans and a few other like the micro loans, not for PPP loans. So the SBA pays 6 months of principal, interest, and associated fees, and that can be a great benefit to people with those type of loans. Net operating losses, the 2018 Tax Cuts and Jobs Act repealed the carryback of net operating losses. Then after COVID came, the CARES Act is allowing a 5-year carryback for tax years 2018 through 2020. Form 1045 for individuals and 1139 for C corporations can now be faxed since the IRS is super backed up. It's a much quicker way to get forms to the IRS. We encourage you to discuss with your accountant regarding any losses for 2018 through 2020 tax years. A couple reminders on depreciation rules. Section 179 limits, there is allowed $1 million of write-offs, and it starts to phase out after total equipment purchases exceeds 2.5 million, completely phased out after 3.5 million of purchases. Qualified improvement property is improvements to the interior of a building that is 39-year property. The improvements must be done after the building was placed in service. This was a technical correction that we had been waiting for after the 2018 Tax Cuts and Jobs Act to make the qualified improvement property 15-year property instead of the 39-year property and eligible for bonus in Section 179. This affects previous years. You can amend 2018 and 2019 to make that change and do the catch-up depreciation that you missed out on, or you can file 3115, change in accounting method in the current tax year. So that's what we have done for 2020 is do the 3115 and a catch-up for some eligible businesses who had this qualified improvement property that's not now eligible for 15-year property and the additional depreciation. And going forward, you can properly allocate the qualified improvement property as 15-year property now. One more reminder, meals provided by a restaurant are 100% deductible for 2021 and 2022. The meal cannot be deducted if in conjunction with entertainment unless it is a separately stated cost. So that's a way to get some, to help out local restaurants and businesses. It's 100% deduction to you because obviously they've been struggling. The last thing we wanted to go over, that's everything that we had to specifically go over with everybody, but we're going to get into our Q&A session next. We did want to go over that we are offering everybody a free 1-hour consultation with us. Again, I know that it was a brief rundown, a lot of new information. We encourage everyone to reach out to us with questions. if you want the 1-hour consultation to start the process, you can reach out to us. At the beginning of the slides, we had our email addresses, a phone number, any way is fine to reach us. Usually we want to see if we're going to have a tax consultation with you, we want to see your most recent tax return. At least that's the best way to get the most efficient meeting going anyways, is to see that, but it's not required. And then we can set up a time for a conference call from there. Oh, sorry, I don't know if that was on the right slide. It got stuck, I guess. Oh, and now we're going to move into our Q&A session. I'm going to turn it over to Scott.
Thanks, Ashley. We'll be going over the questions now. I know Morgan's been holding on to them for the end here. Morgan, can you go ahead and let us know what our first question is?
I sure will. I did really quickly want to piggyback on what Ashley said about the consultation. After this webinar is over, I will be sending you all an email with this PowerPoint presentation, and you can also respond to that email if you would like to set up the consultation time. So we can do it that way as well. All right, Scott. Question number 1. We are a U.S. corporation with less than 100 employees and no other domestic affiliates, but 100% owned by a foreign company. What are the guidelines and restrictions that would impact our ability to qualify for employee retention credit due to the fact that we are foreign owned? What criteria or tests would we have to meet?
Yeah, that one gets a little more complicated because then you have to look at your foreign ownership and affiliation rules. But for the most part, if you're under the 100 employees total across all foreign owned and domestic companies, then you should still qualify. There are a few exceptions that we can go in more detail about if we do the 1-hour consultation. But in general, yeah, you should definitely still qualify for that.
Great, thank you. And question 2 to go along with this. I understand that if we fully qualify for ERC, we can also take the ERC even if we have a 2020 PPP loan. However, I understand we cannot use the payroll costs we are using to satisfy PPP for ERC. We would need to be able to separate those payroll costs in order to calculate ERC. What comments or recommendations would you have for calculating the employee payroll costs we can use for the 2020 ERC when we have employee payroll costs in our 2020 PPP loan forgiveness application?
Yeah, so we've been working on a lot of clients that have their PPP Round 1 and now coming into PPP Round 2 that also qualify for the ERC. So before finalizing the first round PPP forgiveness application, we want to make sure we identify the wages inside of the payroll report that we apply with, so we do not double count them for the PPP forgiveness and the ERC at the same time. So in general, you can select the payroll during the PPP forgiveness period. You can also select the PPP forgiveness period from 8 to 24 weeks. So in this case, if you're trying to maximize both, we probably want to put you back at the 8-week period and use rent and utilities and other qualified PPP costs so you can maximize your ERC credits too. For 2020, if you qualify for each quarter, it's not as big a deal because then you'll probably hit your $5,000 max per employee. But for 2021 with the $10,000 or the additional $7,000 max, we can try to, optimize that from when you received your PPP Round 2. So just let us know if you need any help in doing that. We're happy to help.
Perfect, thanks, Scott. Next question. For ERC, what if you have a PEO so you don't do a 941?
So we've been working with a few of our clients that have PEOs that qualify. Basically, you need to do the calculation and prepare it and then present it to your PEO so they can claim it, then give you a credit against your payroll costs. So it's a matter of fact of working with your PEO to make sure all the calculations are correct and verifying that for them so they can use that information to apply for it on their 941s when they apply for you.
Thank you. Next question. Can you qualify for PPP or EIDL if you have not shown a profit in any year?
Yeah, so both of these are not based on profits. The PPP is based on wages, and then the EIDL is based on revenue and reduction in revenue. So yeah, you can do it without showing a profit. So if you want, we can be happy to set up a consultation and look and see, especially if you qualified for PPP Round 1 or the EIDL may be a little more complicated, but you might be able to get the ERC instead of EIDL, because the EIDL does use a specialized calculation based on your cost of goods sold and percentages. So if you're still showing a profit above the line before operating expenses, you may qualify for the EIDL. So we'd be happy to do a quick calculation for you in our 1-hour consultation and see what we can get you qualified for.
All right. It seems that that was our last question. I am watching the chat box and Q&A box if anyone else throws anything last minute in there. Otherwise, as I mentioned, you will be getting an email so we can, oh, never mind. So that we can address some more detail. Oh, okay, we have one more question that just came in. In order to get ERC for first quarter of 2021, the revenue must be 20% down from first quarter of 2019, where we are eligible. We receive round 2 PPP.
Yeah, so you can also use
I'm sorry, are we eligible?
Yeah, so you can also use the look back period for the fourth quarter also. So you can look at December 2020 to December 2019 to see if you qualify for the first quarter of 2021 for the ERC. So that's another way you can look at it. Obviously, because the first quarter of 2021 has not been completed yet. So we're working with a lot of clients on that. And that's what Ashley was mentioning earlier. We want to make sure we have that in and ready to go by March 31st. So it's properly recorded on the 941 that you turn in for the first quarter. So a lot of our clients that qualify, you're going to get the ERC until you got the PPP round 2. And most of our clients didn't get the PPP round 2 until like the first week of February or right around there. There are some that got it in January, but you'll at least have a full month of ERC there. And then depending on if you qualify for ERC in quarter 2, based on quarter 1 results, we can do that analysis too. So there's definitely some options there for you.
Great, thanks, Scott. And it looks like that is all for now. So I will allow any of our panelists to make any closing remarks if you'd like. And thank you everyone for attending, and please look out for my email to follow up.
Thank you, Scott and Ashley. And we do encourage any more inquiries into any of the questions you have.
Thank you, everyone. Have a great rest of your day.